ETH up 4%. Something about that. ETH up 4%.
Good morning, everybody. Good morning, Alan. What's everybody doing out there?
Hey, good evening.
How goes it, Alan? Before we get rolling, as usual, Alan and I are not licensed financial advisors, so anything you hear us talk about today, this morning, or this evening, wherever you're at, that's not financial advice, just our opinion. If you end up taking trades blindly based on anything we talk about today, you're going to be losing all of your money and living in a van by the river. All right, so good morning, Alan. How have things been? For my part, I survived COVID. I don't have a I survived COVID T-shirt, but that was quite the couple of week or so. But how are things in your world?
Yeah, so good. So it's a happy new year to everybody from China. So today is Chinese New Year's Day. So I've been enjoying the festivities here for the past almost a week, and yeah, it's just been quiet. It's kind of weird because there's restrictions on fireworks and a few other things here, so it's not been the normal crazy noise in Dalian, but it's been good. I mean, it's time with family, so it's been nice, and everyone together. Too much food as ever, so my in-laws been cooking crazy. So
Quiet New Year. I wouldn't know what that's like. My
yeah,
goes crazy every New Year.
Yeah, so we got the usual things in China. The shops are all mad busy before New Year, but a lot of people are traveling. So this area is a lot of sort of workers live here whose hometowns are elsewhere. So it's been pretty quiet. So, but yeah, so it's New Year. So it's been interesting. So obviously a lot's been going on as well in the market since we last spoke a few weeks ago. So, and everything I think was ultra bearish and then got even more bearish after we spoke. It may be today we've got a slightly bullish looking market to look at, albeit into resistance, and our streams have got a pretty good track record of dismantling anybody's hope. So that's
yeah, exactly. So I trimmed coming into resistance here to have some buy the dip fun. So I'm hoping that our show does its job. Yeah.
It's pretty high probability trade. I think it's been over the year. So no, it's interesting. And obviously later we'll have a look at the ETH roadmap, follow up on some things we spoke about before. But yeah, so I don't know if you want to look at your charts first, or should we just dive straight into it? It's up to you. So
let me give that sounds good. Let me give about a 2-minute my take on where we're at. So I posted a lot of things on Twitter about the bullish, kind of the bullish fundamentals, illiquid supply, derivatives, holder behavior, market sentiment. Those are some of the just a handful of kind of more fundamentals that paint a very bullish picture for me. But yeah, of course, the chart, if you zoom into this section of the chart, is very, very bearish, right? And we've just been nonstop selling off, and these ended up being, we've been forced to learn a little bit about this whole Wyckoff pattern thing. These ended up being redistributions. So these are just like little mini redistributions on the way down. So we had this whole distribution pattern and then a couple of redistributions on the way down here. But the structure remains bullish. So what I feel like is happening is the market is transitioning from this boom bust 4-year cycle where, obviously this price action over here was a lot of retail front running the hype around the 4-year cycle, and then they got crushed as the market, because of derivatives, because they could take on leverage and really push the market further earlier. Then they got crushed as derivatives built up, futures built up to a huge amount, and then it collapsed in on them. Of course, in conjunction with China banning Bitcoin, that was a bit of a catalyst. But the same thing happened here, right? So we had retail front running what they thought was going to be a end of the year blow off top, and then derivatives, futures, everything got really overheated, and then we had a big sell off. Now we have the inverse. We have derivatives. I think a lot of retail, a lot of traders that were hurt in this area up here are now revenge short trading. So we've been negative on the futures for a little while here, and all the way down, the futures never got really super overheated at any point on the way down, and the open interest is still pretty high. That tells you there's still a lot of remaining all the way from about this level really maybe this level, maybe the mid 40s down, it's pretty stacked to the short side. So the market is going to at some point want to take out all that short pressure that's been built up on the open interest that's on the short side here. But I don't know that it takes it out just yet. But for me, all I'm looking for, very simply, I'm not worried about a 2018 style bear market. I think that clearly, if we didn't get a 2017 style bull market with a blow off top at the end of 2021 that people were expecting, don't know why people then all of a sudden expect an 85% total multi-year, capitulation sell off and starting in 2022, because it's a completely different profile of the market. So I've been just patiently waiting, cooling my jets, waiting to buy a breakout of this downtrend structure. Now I'm gonna be fairly cautious, as I said already. I've already trimmed some coming into this trend line, this little bit of resistance that we had. I'll go to the 4 hour to show you why I've got resistance here. You see on the sell off, this was the first attempt at a bounce, and then we resumed down right here. So this is that area where there's a little bit of supply, where the people are. This is where the shorts are really going to be aggressive and take more positions in here. Now, if it breaks to the upside, it's going to be a little bit of a short squeeze, probably up into this next area. But I'm still going to be cautious until we get above the 50-day moving average, which is my general trend indicator for myself. So that's where I'm at. That's just a Bitcoin macro view, and I'll just stop there, man. That's what I'm looking for as a trader. I'm just looking for a breakout of this downtrend structure. I would expect us to break out, hit this area of supply, come back down to retest either the trend line itself or some of these horizontals I've got marked on here before resuming up. And we'll be looking for maybe to lean in a little bit to buy these support areas as it comes back in. But I'll be waiting until we break the 50-day moving average and this block all throughout here. We've got a lot of resistance that's going to be built up through here. Kind of break all this and get back above the 50 to maybe look at some more aggressive long entries. But that's where I'm at. And so I'm going to stop and turn it over to you. Let's take a look at Alan's. Alan's got longer term charts. So my charts are obviously a little bit more short term, and I combine that with a lot of fundamentals analysis.
Absolutely. No, it's good to see. It's another one of those sort of inflection points, isn't it, at the moment? So as usual, we can start with we like a picture to set the scene. A little bit of life in China. So Year of the Tiger. So somebody posted on Twitter. So this is my year, actually, the Year of the Tiger. So I'm hoping for some good luck. I've been trying to do some of the cultural things to bring you good luck over the festival. So we will see. Hopefully we have a prosperous year this year. It's been very colourful in Dalian. See, this is a main road in the city. Everything's lit up. There's lanterns everywhere, lights on the trees. So it's very colourful time. We've got the lanterns up in the main People's Square in the middle of the city. There's also been cold. We've had some snow. There's snow on the ground near where we live here, Donggang. So it's been pretty icy and cold as well. So a bit like the market's been recently. It hasn't stopped people being out and about. We've had some lovely walks on the coast in the last few weeks. So walked down to this little cove on the shoreline in Dalian. So been enjoying the last few weeks whilst you've been fixing yourself, Brandon, over there, Texas. So but no, I mean, it's been nice. It's just a little cold. I mean, sub-zero Celsius just all the time at the moment. So it's wrap up warm, but doesn't stop it being beautiful. There's so much sunshine here. It's just, I'm not used to that from the UK. It's just always cloudy. So it's been very, very interesting. So sort of on the charts, it's quite difficult really with this market to know where to look. I've been tweeting quite a bit about looking at the NASDAQ actually, because we've had quite a correlation from the top here. We sort of go right back into November. We just couldn't make a higher high eventually on the NASDAQ, and then it sort of tumbled down, sort of caught up the tumble we've seen in crypto. But now and also I was looking at this yesterday, we finally got a breakout of this downtrend, resumed up, got past a weekly resistance, which is like almost like a bit of hallelujah. We've actually made some progress. finally, and not just rejected again straight down. So this is looking a little better, and there's quite a lot of resistance around. Obviously, after all this chopping around up here, obviously it's quite short term here. So yeah, so this for me has been interesting to see. Got the S&Ps right into a 2 weekly resistance here at the moment. So this one is looking like it's putting up a fight at the moment. So we'll see what happens today. If we zoom that right out, you can see we're right up onto this resistance. We've come back up to test it. So if this rolls over, then it depends on your channel as to what you see as how far we could come down. But this is one view I've got with this channel here from back before the COVID crash. All lines up nicely. We've still got some room there. If you look at the Nasdaq on a similar time frame, I've got some lines here from the base of this 2016 where we started this up move, and then we had the almost like this was a bit like a megaphone. We just got more and more volatile, and then eventually we've sort of shot up. And then I've just cloned the lines up, and it sort of looks like we climbed up above this channel, held, then we made the lower high, and then obviously we've dumped back down sort of 16%. So this one has, we have taken out this weekly here, this resistance. So the Nasdaq's looking okay. Obviously, it's coming back up into potentially trend line and weekly resistance up here. So we will see. I mean, been pretty volatile. It's and it's been setting the sentiment. And I'm still convinced we've got a lot of make sure TradingView redraws this chart. It always gets this wrong for some reason. Let that middle line snap. We've got a lot of, I'm sure we've got a lot of algorithmic trading in this market, which is just creating this sort of short-term correlation. So if there's not much happening in the Bitcoin, on the Bitcoin chart and the ETH chart, it just moves under algorithmic trading is what it looks like. And it follows the sentiment of the US equity markets particularly. Obviously, it doesn't look like there's that much pressure at times. So sometimes you get this big dump down if the order book's not very strong. But when we got down into the much stronger areas of the order book in the 30,000s, the Nasdaq was pushing down and Bitcoin just held up, and then crypto held up. It's been interesting, but we're still seeing the intraday sentiment's pretty strong. The correlation's pretty strong. We're seeing things move around. So the other chart I've looked at quite a lot has been total cap for crypto, because this has been pretty tidy as well. And I was just looking at the relative corrections. We had a 56% correction on total cap last year. We've got to 50.5 now. Overall, so slightly less. But obviously, we have come down into this pretty strong looking area of support here, and we've held it. And obviously, we're now resuming up out of this, what could be a reversal candle there. And that's looking okay. There's a little bit of room on total cap if you ignore the noise from over here. Obviously, we could run back up here, back up towards near 2 trillion. So a little bit of room to run on that chart. That's been a relatively good indicator as we've seen it come down. Obviously, I tweeted this break here. Obviously, we came back up and tested it, and then we've dumped. So, so again, holding support, looking okay. If we look at my main Bitcoin chart on weekly with the trend lines, again, these trend lines go back to 2020 when they were drawn, and we've held again here on the way down. Obviously, we held up here before we dumped last year and did the almost like a bit of a fake out down before we resumed up. This time we've come down and held it, obviously with a similar total move. And lots of other assets, I won't go through all the charts, but a lot of them came down and retested the other smaller tokens, retested their lows from last summer. So there's a lot of things, if you look at it as if we got correlation, you can see a lot of things that said, well, potentially we've got to a bottom. We've retested lows. Some things actually took out the low, particularly weak tokens took out the low from last year. So we've got quite a lot of things that say we may get a bounce out of here. Obviously, the risk here, if we zoom in, is what we've talked about already. Obviously, I've got slightly different look at some of the lines here, but if we take that we were looking for a retest on this sort of breakout, which we failed, we've got that overhead now. So if we zoom right in here, what we've got up here is this outer trend line coming down, and we've got this other trend line. We've got quite a lot of sort of muck here above where we are that's going to offer a lot of resistance. So we can get up above 43 and clear these weekly resistances, which keep, we keep rejecting off weekly resistance when we go back up here. It just comes off and then it comes up and fails, and we've come in again to a weekly and rejected. We've come up again and rejected. This one we're just at now, is this are we going to push up here? Are we going to manage to get through here? Or if we reject here and roll over, and this is a bear flag in a strong downtrend, then there's every chance we come down and retest this low, But if the sentiment remains up in the equity markets, that would be with this correlation and all these algorithms, I think that would look unlikely at the moment. But
we should.
You say with shorts are going to load up in a downtrend when we come up into all these resistances, and obviously you can draw these lines in different places, but they're going to load back up as we get into resistance, and then we'll see. But as you say, there's so many other things which suggest we could see a squeeze if the bulls are sat with cash on the side and think, right, we've had enough of this continual downtrend for a while. Let's push us. We could fly back up here to 46 or something if there's a big squeeze.
Right. Yep, I think that would be the smart thing to look for, is to if depending on how you're positioned, looking for that retest of the midpoint of the sell-off or close to it, something around the midpoint of the sell-off with a short squeeze, and then kind of analyzing from there. But yeah, there's a lot of metrics that definitely point to the potential for a short squeeze. The other part of this is, like, if you look at the bottoming structure here, it looks like a giant bear flag almost.
This is a horrible looking daily bear flag at the moment.
Yeah. So my assumption is that we'll get one more kind of impulse to the downside, build some structure, and then resume up. But because generally speaking, this doesn't look like a very convincing kind of bottom to me. Now, of course, it could be. It could just push out of here. The whole way down, though, ever since we lost right around 50,000, there's definitely been more spot buying than there has been selling. Now, people will look at the chart and go, how is that possible? Well, it's true when you look at just the behavior of where coins are going, the type of wallets, and what's happening with the exchange, the illiquid supply. So it was definitely more spot selling above, say, 50, 52,000, somewhere in that range. But ever since we got below about 52,000, it's actually been net derivative selling, net spot buying. And so that when that situation persists long enough, just like we've had with these big sell-offs, this is the first time since summer that we've seen this inversion where there's actually more spot buying and more derivative selling that continues to push price down. When you get that build up long enough where you have more spot buying and derivative selling, then you get a big short squeeze, just like we did in August, basically, where we kind of blasted out there. So that's kind of my expectation, but I do expect that it will take a little bit of time here. It'll take probably an initial rejection and let shorts kind of really reload pretty heavily, and then as that spot buying continues, especially. The spot buying is going to slow down probably as we come into the 40s, right? There's a lot of overhead supply. There probably will be net spot selling as people exit their positions, break even. That anybody who tried to buy the dip, quote unquote, around 42,000, they're going to be looking to unload at break even. So that'll create some spot selling and allow that derivative selling pressure to push price back down probably, and then we might get our short squeeze. But I would caution anybody that not to be over positioned coming into the midpoint of the breakout, right? So if we do break out and we want to run, I would caution people against being over positioned because things can change very quickly. A lot of those metrics, the liquid supply, things like that can change very quickly when we come back into areas of supply. Namely, 52,000 is a really key area to watch. It looks like on the chart. Those are just adding to your thoughts here that I definitely am looking for a break in this downtrend structure to try to play that move from, say, I do think we'll probably get another retest of that monthly at 35,000 as this new fresh February monthly opens. You know, we've had a solid push. If you flip it to the monthly here, you'll see what I'm talking about.
Yeah, so if
We've
I
had
change,
basically
also change.
no wick to the downside so far. I guess there's a little bit of one here on the monthly of February. I did
So
retest
here's the
38.2. Odds are you'll put in a little bit more of a wick before we resume up, but you know, it doesn't have to clearly. But that's just, those are my kind of my expectations. But yeah, I would if we can get past that midpoint, if when we get to that midpoint 52,000, we're going to get an initial rejection, of course, and then we're going to come back down to some lower area 44, something like that. If should we get a breakout to that level, that's the area to really look to attack. If the fundamentals stay very strong and we come back in an area of support, say like the mid 40s after hitting that 50,000, and the fundamentals remain strong, and we make that higher low out of here, especially if we can breach 52 and make like a little bit of a local higher high from that 52,000 swing, that trap swing, those would be all really good indicators that we're looking to resume further up. But that would be my big caution, is just be very, very cautious on this breakout here, because things can change quickly, and I would want people to be more defensive should we get a breakout here. But first of all, we haven't even broken out, right? First of all, we're into resistance right now, and we're just kind of fighting it.
Right into weekly resistance, and we've got a record of rejecting them all the way down. So I think it's key that obviously we held this big 3-month support here at 35, but it and there's weekly around here as well. But this key to get up here, and I think if we can take 43, things would look much better on this chart.
Can I ask your opinion about, okay, so for you, Alan, what's your view on where we're at with the Federal Reserve actions and the U.S. equities markets? Do you have an opinion on that?
It's yeah, I mean, I think for me, everyone does well to remember that in the short term, markets are really irrational, and often you'll get the hype in almost like in both directions. Things will get oversold in a panic, and then things will get overbought in the euphoria going the other way. And I think with this, given the Fed's actually done nothing at all so far, they've just spoken about something and have got a track record of actually not doing it, certainly recently. I think there's a little bit of the market's got itself in a bit of a panic right now. But if you look at some other things, such as what is this year, you've got, I think, midterms in the US this year as well, and there's other political considerations going on as well, that it's typically been a volatile year. So, you know, when the Fed's talking about raising rates, I think it will increase volatility. But I don't necessarily know that the market, you know, people are out there saying the market's going to go to naught, basically. There's so much doom and gloom everywhere because interest rates go up to 2% or something over time. Well, rather than the fact that it may take them several years, the way they're talking about it, they may get to 1%. I mean, 1% rates is nothing. You know, in the end, markets could still be very bullish during that environment, but may just get more volatile. You know, we've pretty much since the 2020, you know, big crash gone straight up. So, you know, we've had lots of very small, it's almost like non-existent corrections in equities. They've been 5%, 8%, 10%, 5%, which is just noise. And the NASDAQ's just particularly just gone up. So it's come down, I think 16%, Bitcoin's like 48%. It's roughly a 3-to-1 multiplier. I think things have overreacted, but I think we may see this short-term manipulation and sentiment just yo-yoing around as, you know, some politician says something or the Fed says something or whatever, you know, and it just keeps moving sentiment. And those big hands will use that to create lots of panic. You know, they'll run lots of headlines and the usual stuff will happen. Everyone will sell to a whale hand everywhere. So I'm expecting a volatile year. I'm still torn a little bit between, if we do get some sort of breakout here, this thing could run. There's no reason why it won't in crypto. Crypto's crypto. It's not going to suddenly stop being volatile in both directions. But I'm not, there's still, if we go back, Brandon, we did that whole analysis on the different models, and we talked about the different scenarios. There's sort of two there that sit with me still from the list, because obviously the end of last year, we saw that almost like the Fed came out at the wrong moment and broke everything. if you want to think that was the catalyst in November, they started talking and everything corrected. But we've still got, the block model, you could say, is not dead yet. It's struggling a bit when you look at the chart, but it's not dead yet. But certainly the lengthening cycles, if you run that period of running towards the end of this year, which I think Ben Cohen, Nick Merton, others are in that space, the cycle's lengthening. If Nick Merton's plays out, and he's been for a long time, at the end of the year looks like where we see a blow off top, then that's still completely looks good to me. And it lines up with all these other things like the past performance of markets in this particular part of your US cycle, et cetera, et cetera. So I think there's still a lot in that. I'm always just wary of trying to be too sure on a prediction, because we don't really know. Crypto can still be insane at any moment. You don't know. It could nuke to 20K tomorrow, or it could be 50K if it just gets going. You don't know. And I don't like this flag. Looking at this chart, it's just like, that's not really what you want to see in a downtrend, but that's very short term. I can't be bearish crypto. This is not the ghost land of 2018. There was nothing happening. There's nothing on Twitter. The projects were all dead. If you look on Twitter now, I've got a lot of the ETH guys on there particularly. There is so much going on. You've got brands lining up, putting NFTs on their accounts and ETH ENS addresses getting involved. You've got phenomenal numbers of users coming into the space, just doing something, whether it's NFTs, whether it's DeFi, whether it's whatever, people adopting Bitcoin as a currency. This stuff is happening in the crypto world. This is not 2018. It looks almost zero like 2018, and
activity is,
as you say, it's you can see short term the sentiment could go bearish even more, and we go down and everyone's panicking. That's what Max Payne would look like. But is this looking like 2018 bear market? I just can't be that bearish at the moment. So that's a little bit of my take. I just, are they really going to turn the music off, Brandon, in your country in election year? Is that, Biden's got poll rating trouble, etc. Just like, it's not normally the time you crash the equity markets.
Yeah, for me, I'll echo your sentiments, and then maybe we can move on to ETH 2.0, talk about all the stuff that's happening. But yeah, on the Fed front, my thoughts are simple. And like you said, exactly like you said, if they were to raise rates 1-2%, the economy can still thrive in that environment with interest rates. It's more, did they get aggressive with tapering of QE? We've seen some tapering of QE, slowing of asset purchases, but they haven't started tightening. So the question is would they ever even attempt quantitative tightening, trying to rein in the money supply? That would break everything. So they're not even talking about that. So I don't think, I don't think we're going to have very high interest rates if they do raise interest rates over the next year or two. And then secondarily, QE is only going to slow down. It's not going to go to tightening, right? So that's the other thing I think people kind of get maybe worked up about, but that's not.
There's a lag there as well. Quite a significant lag. They say something today, even if they did it, it doesn't happen immediately. The market just reacts in a sort of panic. Right. But there's going to be so much money sloshing around for a good while in the market. I saw someone else's numbers that said there's just mountains of capital on the sideline there at the moment. So, yeah, where's it going to go?
Exactly. Well, we want to transition to ETH.
Yes, let's have a quick look at the ETH chart as well. So, obviously, we've been looking at this ETH BTC chart for some time, and this uptrend, and we tested it again. No surprise, we came right down near to the trend line. So as I'm a bull on Ethereum, I have been rotating some of my stack into Ethereum. I had a limit order sat just above that line, which got triggered in that sell-off. So I now own less Bitcoin and more Ethereum, if that was possible. So I've been positioning. It also was quite a nice low value to be crystallizing a gain on some of that stack. So that's not terrible for this. Obviously, we're in a UK April tax year, so I was quite happy to do that with some of the stack. So I've rotated a bit more here. We've got a pretty nice resumption at the moment on Ethereum. We will see if we came back down, say, to test this weekly support down here, because it's still horizontal, then yeah, I would be rotating some more, I think. But that's probably the only real trade I've made during this period. Say it was a limit order, I think 6.5, just at 0.065, so that hit beautifully on that line. So I'm bullish on, still bullish on the roadmap for this year. Now this ETH chart is probably the one that's interesting, because we have got through a weekly here at 27.06 finally. So ETH's kind of managed to push up through resistance it was struggling with, but I've got quite a lot of trend line and other resistance coming up overhead. So if we do push up here, it'll be interesting to see what happens. So Ethereum charts and dominance had been smashed a bit. Obviously, we looked at this where we got up and touched this middle line on this big channel. No surprise, we got a rejection. We actually came down to halfway. Looked like we were going to break down. Actually, we've broken back up now, but we're now at a sort of resistance level on that dominance. So kind of interesting. This still keeps forming this big sort of cup and handle looking chart here. So not change my outlook on that. And obviously with the merge and all the other things happening on Ethereum, I'm still of the mind that all this stuff to do with cycles that looks like it's broken is going to get broken some more. I think that's what Ethereum is going to do this year. It's a tree shake. We don't quite know what's going to fall out. We don't quite know what's going to happen. There's so much going on in the Ethereum world. It's going to shake things, and we will see. And that's not to say it's like, well, ETH will go up and everything else will go down or something stupid like that. It's more relative performance. Bitcoin's got its own stories at the moment with adoption and currency stories and other things. Also, it's negative stories. There's been more mining bans and other things, regulation sort of stories, etc. But it doesn't. For me, still, not bearish Bitcoin, but just more bullish Ethereum. And obviously, it's been doing pretty well. If we zoom in, say it's up now in the 2700s, we will see. Lots of resistance ahead, but that's, you can't really find a chart at the moment that hasn't got a big stack of resistance up ahead. See, we've come down a long way. Obviously, this one, I put this green box in and we came down and we just smacked right onto the top of it there. There's a 2-week support just at the base here where we spent a fair bit of time consolidating last year. So far that's looking okay. We've held that. So if we roll over, we could see 1800. I shall want some more ETH if we get to 1800. That's for sure.
So I've been stockpiling some spare fiat myself, and I'm trying to decide where I want to go with it. Should we get another kind of nuke down? I'm expecting one more big nuke down, and so I've had my eye on some Ethereum, like 2K to 1800 for like insane kind of low point of this sell-off if we were to get another rotation down. But what I don't want to see it do is I don't want to see it take out that July 1700 low. That's the main thing.
Yeah, I said there's always a Max Payne scenario in crypto, particularly if we're in manipulation and sentiment, and the fear and greed goes to zero, and everyone's as blood all over the chart. You never know in crypto. We can always take out a low, but I would think we saw with Bitcoin, as soon as it was trying to get below 35, suddenly the volume was there. The order book was very strong, and
Yeah, exactly.
I think we see that in Ethereum again. We saw it up at 39.52. It held up there for ages when the Bitcoin was selling, and I don't think that was much more than just a very strong order book at the time. Eventually, the orders ran out. The pressure killed the order book eventually, but it held up there a long time, and I think we'll see strength. So the other thing that tells me it's not a bear market is when you look at dominance on Bitcoin, it's just not gone anywhere. This is very strong sort of altcoin dominance here, and it just hasn't moved really. It was down 2% in all this carnage of a 50% correction. Inverse BTCC here is down 2%. That's quite remarkable in what I've seen in crypto, because when we came down, not massively, but we were down 8-9% last year in the summer when we came down here, and this is just not moved. So again, some of it's Ethereum strength, I'm sure, with the burn and the order book, but remarkable. And of course, it almost as well tells you that story that there's a lot going on in crypto. There's a lot of other chains, there's a lot of other projects, there's a lot of things which people are interested in. It's not looking dead. So anyway, so that was, it's a quick look at the charts. There's loads more stuff we could look at, but I think we'd be here all day. So obviously we always look at ultrasound money and the burn, 1.7 million now. We've had some insane weeks again, just negative issuance weeks again. I mean, I don't know where we are. We're 81%. Again, look at OpenSea this week. I mean, that's just crazy. The NFT mania just continues, and it's like, thanks guys, you keep buying NFTs. I'm all right with that. Just keep burning all the ETH. I'm happy not to be, I probably should have been involved in NFTs, but I'm not, and I'm not going to rush into something I don't really understand as a investor. I've never been a sort of art collector or a collectibles person. If people are and they're used to those markets, saying some great trades to have.
I definitely like the NFT space. I'm just not a fan. For me, kudos for people that have been collecting JPEGs and selling them and everything else. And if it's purely a JPEG or a work of art that you're buying ownership of, I'm not interested. What I am interested in is like, metaverse things. So land, land in some of these bigger metaverse worlds like Sandbox, and then any sort of NFT that has like the ability to interact with it. So some of these that are going to be, that are currently just a JPEG that's actually going to be an item, an in-game item or something in a gaming world. Gaming NFTs interest me. So my play is Sandbox and Engine on that whole space. I haven't bought a JPEG myself, but I'm more interested in, the JPEG is the kind of the proof of concept, the very first stage of it. Then we're going to rotate into, again, that metaverse world, in-game items, land, those type of things. So that's where I'm more interested in playing myself.
I get that.
Is more long term. But yeah, it's helping the ETH burn. And it helps the space. I mean, a lot of people, it brings a lot of interest into crypto in general.
Oh, completely. And that's, as I said, I just think that's such a big part of the story as to bull or bear here. We're seeing crypto correlated. We've seen a market correction, fine. But we haven't got a wasteland. We haven't got everybody leaving the space. I mean, the only thing you can see is sometimes is just the funny sentiment on Twitter, where if you're bearish with something, you get a heck of a lot less interactions. And if you post something saying we're going to the moon next week, and then everyone's liking it, it's kind of curious, but it's the way of the world. So saw this today, which I thought we have a quick sort of little look at this, just curiously before we look at ETH 2. This was just something I randomly stumbled across, which was somebody looking at this potentially Wyckoff on the DXY. So that was curious. If I'm looking at the macro and I look at US dollar usage, and obviously we know the dollar strength is because it's used for the reserve currency and a lot of people buy dollars, but we also know that that's under pressure. There's not been much media coverage of RCEP, but it's the biggest trade deal in the world. Got all of sort of the big Asian countries, including Japan, Australia, etc., talk specifically about not using US dollar for trade. It's not impossible to see the dollar heading off down there in that scenario where you've just got weak demand for dollars. And it's not just, China and Asia, there's Russia involved as well, obviously, with all the energy trading they do. And European countries, Germany and others, are talking about euros, etc. So we will see. I was just curious to spot that we're seeing a lot of Wyckoff patterns. I don't, I'm not a Wyckoff guy, probably like you aren't, but you can only notice the patterns are playing out quite often, and it's like, goodness,
That's the thing that you start to just when you're forced to contend with it, and you've been forced to see it over and over and over again. You can't help but to see it other places. And I have my trading system to trade around regardless of what kind of pattern we're in or whatever else. The other problem with Wyckoff patterns is it's really hard to tell sometimes if you're in a accumulation or a distribution. First of all, second of all, it's because it could be reaccumulation versus distribute. There's just all kinds of patterns, and it's hard to tell until the very end when it breaks as to which pattern you're in. But that's why I stick with my more traditional TA methods that help me navigate regardless. You can see there, if you just that chart that you have in the bottom, that little white chart, what my brain sees is an ascending wedge. So you see that whole Wyckoff pattern from SOW phase B. You can draw a trend line all the way up through the top, and then you can see, from UT phase B across the LPSY, it creates an ascending wedge. And when you break the downside of the ascending wedge, you're going down. So it's like I really, where you're at on a Wyckoff pattern, the Wyckoff patterns almost always form general kind of, more broad patterns that you can then play off of. So that's why I watch it. It's interesting. Like you said, it's kind of an insult to your intelligence when you see this thing play out so many times. Like, man, people are just out there with Etch-a-Sketch, just like marking up charts how they want them to be. Like, this is insane.
It does seem like you can always find another Wyckoff chart that matches the candle pattern, but it's curious nonetheless, because there is some logic in the dollar being weak. I could see that happening over time here, but we will see. We always say DXY is a relative measure, and it just doesn't. Is euro and Japanese and all the other currencies going to be stronger than the dollar? We will see. Or do they all flush away? That's a macro thesis. So anyway, so ETH roadmap, and we've talked a bit about this before, but this was the tweet from Vitalik, which really goes into this whole sort of roadmap for Ethereum and where we're heading. So obviously there was a Bankless podcast episode that everyone can find where Vitalik spends 2 hours going through all of this. Now, what I've done in preparation is just made some notes on that and what Vitalik was talking about for each of these areas, so we can have a little look at this and see where Ethereum is. Talk about the things behind us, in front of us, etc. So, and I've here's one I prepared earlier with the graphic zoom, so we can actually see it a little better to have a look at what's going on. So I think a lot of people will have heard this as ETH 2, and what we've seen as a sort of introduction is the language changing within the Ethereum website, and the community now is to start to remove the references to ETH 2, because there's a lot of confidence now that the merge is going to happen, so that we'll be back from having this whole ETH and ETH 2, staked ETH and ETH 2 rewards that we've been seeing on exchanges like Kraken for some time, will all become just back to being ETH. So that's like the ultimate game here. So this roadmap anyway that Vitalik drew is, so time is going left to right. I mean, that's a key thing to notice here. It's not necessarily a top to bottom. There is elements of that as well. The things are being worked on all the way down this roadmap. So it's sort of time is going left to right. And over on the left-hand side, we've actually got a what's already done piece here. So obviously the ETH 2 consensus layer, so Beacon Chain, has been launched. It's been forked as like a warm-up now. So it's like an upgrade was put in, and there's like client friendliness set up. So these things have already been done. And there's a sort of, there was a birthday of ETH 2, which is when Vitalik posted this roadmap, or this like update to the roadmap. So Beacon Chain's been out there. If people have been staking, whether it's, they run their own validator or they've used something like Kraken, you can stake your ETH into the Beacon Chain and you get ETH 2 rewards. Well, you can't get to them at the moment. So you've got a future reward, but that's been operational for some time. Obviously on the execution layer, which is ETH 1 at the moment, if you like, then there's been these upgrades. So refunds removed, gas cost updates, and obviously we've talked about more than anything, EIP 1559 introducing burn. So the rewards moved from miner to being, the miners to being burnt. Interestingly, the miners are still here. There's a lot of FUD about miners all leaving. We're at a record hash rate at the moment on Ethereum. So as ever, miners hang around when the price is going up and probably will be here to the end. So obviously Vitalik's also sort of named this quite almost comically at times. So the sections of the roadmap he's got is the merge, the surge, the verge, the purge, and the splurge. So that's quite nicely presented as to all the different sections. And and what we'll do here is we'll just sort of whiz through what's involved in each one. What are the headlines that were talked about by Vitalik, and maybe what some of it means for those of us who hold or use Ethereum. I think everybody's aware of where we are right now on the obviously ETH 1, which is, we've got the traditional ETH layer 1 that still works largely as it did, 5 years ago with the addition of 1559. So changed the dynamic so that we burn the ETH that would have gone to the miners to reduce the inflation. And we've got roll-ups. So we've got layer 2 roll-ups. We've got a whole stack of them now that are live, fully live and operational. I have funds on a lot of them and testing them, using them. My most recent one, ZK Sync through the Argent wallet, the mobile wallet, that works really well if you want a very simple way to put a bit of ETH in there and stake it. If you like, in the DeFi world, you can just press a couple of buttons and it all works. And that's all on ZK Sync on rollup. So great. So we have that as our sort of base point at the moment, but obviously we still have this separation of the execution layer being on ETH 1 and the consensus layer being on ETH 2. So the merge is where we bring this together. So we move from proof of work to proof of stake. Now, the headlines here is that the sort of the most recent ones was that the full specification and transition process is now defined. So there is now a block set for when the merge will take place. That that could still be adjusted clearly if they find anything serious in testing. That is now set, and all of the process is documented. The specification is there for how to do the merge. The key thing for a user with the merge is that there's no change to the applications that run on ETH 1 today. You won't see any, you can still use Uniswap and DeFi, etc. Probably the most you would see as a user is you might have to update the MetaMask plugin or, some other wallet or some other, client end thing that you have post merge to be compatible, a bit like with 1559. Maybe it will still work, but for it to be optimal, you would need to have applied an update on the client end. The things you do with websites, and generally the website will be fine. So merge is coming, and it's it's the you can say it's the biggest change to Ethereum since it's launched. I don't think that's an understatement. It's a big change, and in the background, the God knows how many terawatts of energy that's being consumed at the moment on proof of work will disappear. Now, of course, some of those miners will be mining something else straight afterwards. So if you're the crypto space, you can't really hold that up and say, look, we just dumped a terawatt of energy from crypto, because there's all these miners who will have other things they can mine. But I think there's a good chance that quite a lot of that capacity over time will go offline. There aren't many things you can mine that are as profitable and, you know, consistently as profitable as Ethereum has been for the past 4 or 5 years. So so the merge, that's kind of the simple one, really. And then, you know, as we work our way down here, we have what Vitalik calls the surge. Now, this is all about scalability. So having moved to proof of stake, this is about the scalability for roll-ups. I think it's worth understanding that point. Because roll-ups now exist, the surge is about scalability increases for roll-ups through sharding. Now, what that means at a technical level, and you'll probably get this, Brandon, without any issue, is the sharding is now sharding of data, because the computation execution is elsewhere with roll-ups. Now, it's not on the layer 2, it's not on the layer 1. So the layer 1 here is about sharding data, which makes the sharding process a heck of a lot easier, and keeps the sharding sort of requirement almost like contained in a box. You don't have to go for some of the very, very advanced sharding algorithms that have been tested on other chains out there. You can actually have a pretty basic, what they call quadratic sharding formula. You don't need too many shards. And you can get up to, you know, Vitalik thinks you get up to about 100,000 transactions a second with keeping the layer 1 under control, in terms of you've still got that decentralized layer 1. So you don't put the shards in and then have the size of the chain and the state data goes out of control, because you've got almost like a Solana type, you know, mega node requirement in order to process everything suddenly. It keeps things in the box, if you like, because it's all about now scaling the roll-ups. And, you know, there was numbers quoted of 2.6 megabytes a second of total data throughput, to get to what Vitalik said, 130,000 transactions a second. So again, a lot of this we'll see as we go down is all been about, as roll-ups have come online, is about simplification of everything that was in the original design for Ethereum. So I see that as very positive. As a developer, simplification is kind of everything as you're building complex applications. If you can get, sometimes you can get a slightly less efficient but much simpler implementation is your better implementation in software. And a lot of this, we will see this time and time again. And, you know, in here, there are other things you can do with block times and shard sizes and counts, etc. I think what Vitalik thinks will happen is like you've got the Moore's law on processors, and you keep seeing there's more and more capacity. We'll see over the time bandwidth improves, you know, everyone's got faster connections, you've got faster computers, is that these things can be adjusted over time to make sure the nodes are still able to be used on moderate hardware, but just in line with that, you know, I guess the state of computing as a whole. So I think the surge is, sharding originally was thought would take a very long time post-merge, because it was in this execution sharding, which is very complex to implement. Now the thought is actually this can come pretty quickly, because there is no real technical barrier anymore. A lot of these things are already, at least in proof of concept, but the sharding methods that Ethereum will use have been deployed elsewhere. So in other chains, so that there's not a sort of reinvent, you know, they're not going to reinvent the wheel here. You know, there's proven implementation out there. So that's, you know, the surge, all about scaling, and using the roll-ups that are proving extremely successful. As I say, I'm using roll-ups. I've used Loopring. We talked about Loopring way back when, you know, when we should have bought all those Matic tokens, when we bought some Loopring tokens back at the start of scaling.
We did it backwards.
Yeah. we had it right, because ZK rollups is the better tech, but we had it wrong because Polygon got all the users.
Yeah.
Because it was more usable in the short term and more open. And I think, you know, we will see that theme follow through everywhere here, that this is then about simplification. So if we sort of continue down, and obviously we can pick up some questions at the end, because this won't take too long. The verge here is all about statelessness. So this is to do with making the clients stateless. So this is an implementation of a vertical tree instead of the way that state is currently handled in Ethereum. So this can get pretty complex at a technical level, but the sort of idea here is that you don't have to have an entire database on your client in order to do your validation. So these vertical trees allow you to do things in a much lighter way. So it's a bit like with a database. If anyone's ever worked with a database and you do a replication strategy, you've got an incremental update. A bit like maybe even if you're doing a backup of some stuff, you do an incremental backup. It's a heck of a lot faster than doing a full backup, where you have to stick everything into a backup vault every day. So this becomes much more like everything's much more incremental. You can start doing validations very quickly with minimal data and do them in RAM. So as a developer, you haven't got a database. So again, this is not, the vertical tree is not a new technology, if you like, that's specific to Ethereum. This would be Ethereum's implementation of a vertical tree. So it just makes the client much, much lighter. And we can sort of come back to that, but I think it's extremely important that, again, you get the overheads of everything down if you're promoting decentralization. We've seen Solana as this worst case example, which I'll use again, of when you have enormous big fat nodes as your plan, you can't decentralize very well. You can't run that on the Raspberry Pi on the end of your corner of your desk. It's not, you have to have 256 gigs of RAM and 64 cores and have it all in a data center on a 10 gig network connection. That's not decentralized computing, which is what Ethereum's design is all about. So a lot of this stuff is just bringing the overhead down in the network. So I'm just looking at my notes to see if I've missed anything, but yeah, it's basically everything in RAM. So and then it sort of continues on that that theme. The purge is all about eliminating historical data and technical debt. So again, if you've worked with databases, sometimes this is a bit like, just imagine you were the Amazon order book and you've got every order that was ever made on Amazon is in your database. Over time, that gets a little bit unwieldy. And this is what we see with blockchain. And they used an example, which I'll come back to in a bit, but they use the example of the old snake game, where the snake gets longer and longer and you have to keep trying to collect the, move the snake over the dots. It's like the old sort of 8-bit game. And as your snake gets longer every time you collect a dot, it becomes impossible not to eat yourself eventually, as the body of the snake gets longer and longer. That's a bit of a good sort of analogy with the blockchain, that the blockchain is going to get bigger and bigger over time. Now, even if you've got limits on the bandwidth and the block size and all of the things that increase the sort of state and the size of the blockchain as a whole, there's still going to be a point, which Vitalik thinks is sometime down in the future, but still there's going to be a point where it starts making sense to use state expiry logic to keep the size of the chain under control. Otherwise you can imagine if you're trying to sync a full node and you're trying to pull the whole chain down, this starts becoming almost impossible eventually, particularly if the size, the sharding amount, the amount of shards has gone up, the amount of data in the layer one has gone up. It takes time. So there's many aspects to these things, many things technically in here that can be done. There's protocols which can do things like spreading the database around. So I made some notes earlier on various protocols that exist for doing this, which are the portal network, as it was called within Ethereum. It's a bit like, so say you run your node, you only need to hold part of the blockchain on your node, but you can pick a random part. Now, if you've got enough nodes and everybody does this across the whole network, you've still got the whole state. So that's like one method of reducing the overhead on each node. So it becomes like a distributed state. in here, if you do things like state expiry and then have archive nodes, which have the full state, and there's a process for retrieving things from archive, again, it's a bit like your backup. You go back to the backup to go and get your state information if you need it, and do that with a protocol. So this brings the overhead of the whole network down. So again, a purge of all these things, and technical debt would be about the code. So maybe there's a lot of things in the protocols in Ethereum that have created a technical debt. So there's a lot of code that maybe is complex, tricky. There's opcodes, things in the EVM, the way everything's been designed. But if you spent some time cleaning that up, whilst you could still maintain compatibility, you could bring the overheads right down for how the Ethereum operates. So again, this is something that I've experienced in software development. You have to go back and clear technical debt out of implementations. You know, I've worked on e-commerce systems. Once you get to sort of 5 or 10 years old, there's a lot of this. There's a lot of stuff you go back and look, why on earth did we design it like that? You know, and you go back and you change it. You know, you take the overhead out. Databases are terrible for this. People add indexes and all kinds of other things in you know, there's stored procedures everywhere. There's lots of things that you need to do to keep the overhead down. So that's, you know, almost like some typical IT for a developer. And then the splurge is simply about other stuff, extras, amazing things we can do. I think there's all sorts in here that we won't go into, but lots of things to do with, you know, account abstraction, etc. That are just to do with, you know, being able to do multi-sig better, etc., much more efficiently in Ethereum. The one that jumps out that I think is interesting for people to understand is ZK snark everything, which is interesting, which is the way you use proofs to reduce the size of something. Now, if we look at our snake, anyone remembers the snake game? Here we have it in a web browser. So this will be chaos because this probably won't work well in my long distance thing, but we can play the snake game, and we can see we can try and collect and every time the snake is going to get longer and longer and longer. You can see over time it's going to get incredibly difficult to do this without eating ourselves, and then we're going to die. Oh,
you do.
See, I'm going to
the
eat
game
myself.
Is still.
This is 8-bit. I'm old enough to have played 8-bit games to death. Arrow keys. I'm going to die. There we go. Now, if you look at the length of the snake here, what the snarks would effectively allow you to do is to do something like validate a block. You just have a snark per block, and then you can validate the block from the snark. You don't need the full everything from the history of the chain. You just have to basically validate the snark, which is like a proof. So if you draw this snake, you'd have a head, and then you'd have a fixed length snark, which basically says the body is over there, and I can prove that the body is okay. So don't worry about the body. So you can play this game all day with the body not getting any longer on the snake. It's a great sort of analogy for proofs. So as you can imagine in blockchain world, that suddenly offers enormous potential for efficiency and how this is working. So that's one of the things where I don't fully see. I sort of see it as a low-level developer that this idea that snark technology is revolutionary for the implementation in blockchains. I can see the high-level concept. Vitalik thinks there's stuff everywhere from the way that EVM executes, etc., where it could take you to a world where you don't have to have the EVM to do validation of the execution. You just need the snark. You need the proof.
That's something I hadn't thought about. That's interesting.
Yeah, so this brings the overhead of everything right down. I mean, it's just, you get lighter and lighter. So the question was posed, could you run a validator on a mobile phone? And the answer was yes, potentially, Vitalik said. And I can see that. I mean, it's not least that you've got some insane core in most of these phones these days, but, you know, which is very fast. But you don't have to do the things you needed in terms of having bandwidth and going off. So this is, you know, it's the future. It's probably years away, but this is, I guess you could almost go back and say this is the depth of the roadmap that's now there for Ethereum. And Ethereum still has by far the biggest. There was somebody did a look at the developer count for the whole community, and I think Ethereum was some 4 or 5 times bigger than the next one, which was Polkadot, actually, surprisingly. But Dot's got a lot of implementations off the back of it. It's a big community. It's got the most projects, and I think with layer 2, it's sort of stepping again now. We've got layer 2s that are now fully open, so anyone can deploy to them, which obviously we didn't have last year. So I hope people have got probably questions that I can't answer, but that.
Well, we got some comments that you need to
summary.
We need to get you a Twitch account so you can stream your 8-bit video gaming.
Absolutely, it's misspent, BBC Micro in my case, 8-bit British computing history. But yeah, it's
what's fascinating to me about the Ethereum roadmap is it basically is turning Ethereum into Cardano. That's hilarious. It's funny being a Cardano guy. I'm like, yeah, we've been talking about this stuff for forever, and this is like the exact roadmap that Ethereum's going down. Is exactly how Cardano's built. It's kind of like Cardano's, but more of an integrated layer 2. Like, so the Hydra heads are more integrated than like an external project. But a lot of the same stuff, right? So exactly this, a lot of proofs so that you can, you don't have to have full state of certain things, and then being able to prune data at different points, and then isolate and localize data to Hydra heads so that it's, the main chain is very lightweight and adaptable, and so forth and so on. But of course, it's still not. It doesn't turn into, that's silly. It doesn't turn into Cardano just because very different accounting model. The accounting model versus EU TXO. But it's interesting that that's the way that this kind of lightweight, very efficient layer 1 with all the interesting stuff actually happening at a layer 2 using, proofs are just a very, very efficient and convenient way to make the state of the underlying ledger very lightweight, and then that way you can have all the more interesting complex stuff elsewhere, and you can simply prove that work or those computations or that data is intact elsewhere.
Absolutely. I mean, I think Ethereum community people might argue that Cardano copied all of Vitalik's work right back to 2016, but that's a debate for another day. Because all of this stuff's been there. What we've seen though recently is Vitalik's filled in the detail, if you like, but most of this stuff goes back to, some of it's right back near the start of Ethereum. What's taken time is that we've almost gone for that. We've got usage first, if you like. If you go through that model, Ethereum's actually managed to capture the usage. We've got DeFi built, we've got NFTs built, we've got sign on with Ethereum built now, we've got rollups built. And what I see is bullish in the design here is a lot of stuff's not, some of this is talking about what is almost like the ETH core, if you like, but a lot of the innovation, and that includes the models of the way state is handled similar to Cardano, is being done in the layer 2s. And you can pick a layer 2 based on which sort of formula you think is more suitable. So if you want a state channel, if you want to do payments, fine. If you want ZK rollups, fine. If you want optimistic rollups, fine. If you want layer 3, which is now also there with Starkware's betas on layer 3 for gaming and such like, where you have less, the decentralization of the sort of almost like state data from where you are right now is less important than maybe your balance is and the things you've actually purchased with hard cash and things that could get written down to layer 2. There's another layer to make everything faster and faster and faster. And this is going on in parallel in the community, which is why we've seen this. You go back a year and we had this, we'd have been talking about layer 2 is new and we don't really know what's happening. Now we're almost overflowing with layer 2s. It's like,
yep. Well, that was a big conversation. We talked about that, late 2020, early 2021. You and I were saying, layer 2 is going to be where it's at because of all the, gas fee and the usage, and as the ecosystem develops and so forth and so on. And well, that's clearly the way it's developed. It's
been, remarkable to see. And yeah, we will see. I'm just obviously taking a quick look at the market again. Obviously, Bitcoin's at 38.3, stuck under this
Yeah, it's just into that resistance right there. We'll see if it. I'm
Red
watching it.
candle.
My charts. I've got this trend line here that's just it's. If we were to get a break to the upside above right around 39.2, so I'm gonna, as soon as we get off this live stream, not financial advice, I'm gonna put in some breakout orders at 39.2 that are pretty much either it goes or I get stopped out immediately. Like I'll probably have like a 30, like a 38.9, whatever, stop on it. But if we were to break that, it would be both a break, retest, resumption of a 38.2 level, but it would be a breakout of this trend line, and it would be breaking these. I've got a daily candle here that's got a high. Yeah, so our current daily candle high print, it's right at where it's at. So we break the high of day, basically. Let's put it that way. If we were to
Yeah, I mean,
break
you've
the
got
high
the
of the day,
weekly.
it's probably going to move up to the 40s. So I'll put a little breakout order there myself, 39.2 for
We've hit
myself.
this weekly almost bang on twice now. So it's
Yeah.
whether you see this as this sort of wedge up into there, or whether this is
It's
a bear
definitely
flag.
more of an ascending wedge or a bear flag. If it were to break,
We've
it
got
can
a
break to the
live
upside.
stream. It has to be a bear flag.
Yeah. So now that as soon as we wrap up, it's going to tank to 35K, which is what I've been looking for to load up anyway. I'm waiting for a second bounce at 35K. I want to see a higher low come in. I want to see some market structure get formed there, and then take a bounce off of 35. So what happens is when you get a sell off into like 35K or an area like that, it'll wick down below it, and those wicks below it. Whenever you close back above it, you start closing 4 hour whatever time frames above that 35K level. Then you can start to take a bounce into the 35K level, anchoring your risk management below whatever wick you put in on the initial sell off into it. Because you know that if you take out those wick lows, you're probably then going to rotate and go ahead and go lower. So for me, I've been waiting for it to come back into 35K, get an initial bounce off of it, and then the next touch of 35K, I'll be putting an order on with the stop loss below whatever wick we put in on a sell off. Either that or a break to the upside here. If we do just continue to consolidate just below this trend line and this area of resistance, a 39.2, yeah, would be taking out the high of day. That would probably then create a little short squeeze, a couple thousand, maybe up to 42 or something. That would be a worthwhile play in my opinion. So 2 things I'm looking at, and then otherwise I've got to wrap because I've got somewhere else to be here in just a few minutes. So thank you, Alan, so much for your time and the overview of ETH 2.0. I think that was very valuable just to get everybody. Most people here have either Ethereum or Bitcoin, or probably most of us have both. So very good to keep a pulse on what's going on with the space. So appreciate your overview.
Right. Obviously, if there's questions we haven't answered, then just make a note of them, and we can pick
Favorite chain? Oh, Alan, what's your favorite chain excluding ETH or ADA? Q-Dizzle wants to know what you got for something outside of ETH and ADA. I'm gonna guess a layer 2.
Yeah, I mean, I would keep an eye on. There's layer 2s which don't have tokens at the moment, so I think if I'm speculating, looking forward, use the layer 2s, put yourself in place for airdrop, and that could be a good place to be as this year runs on.
He talked about what's the one the swap, the one that allows you to jump between layer 2s. I forget the name of it.
Yeah, there's Hop protocol, there's
Hop,
Seller, there's a few now. You can do a search for the
yeah,
protocols. There's more coming online. You can now go to Loopring as well on a different one, etc. So yeah, there's progress all the time in that space. So there will be airdrops on some of those. We've seen some. I mean, I know in the US you guys you have the freedom not to be able to receive airdrops quite often.
Yeah. Thanks, Alan.
Badly.
Yeah.
But obviously for those who are not in the US, because there's obviously
we can still do yield farming, which is my way of trying to take advantage of what you guys do with your.
Exactly. You'll find some farming of those drops going on, and then et cetera, liquidity provision. So
yeah,
there's probably that. I'm portfolios mostly Bitcoin, Ethereum, and a little bit of just other bigger stuff at the moment. DeFi, etc. I mean, DeFi's been wrecked. Some of these charts are holy.
I'm gonna give you
so
the two I've been watching are MTV and ALF Zero. Just a small, super speculative little chains that could eventually do something.
Yeah. So there's there's just an example of this correction. People say, have we corrected to the bottom? Well, Loopring came down 83%.
Yeah.
It's like, how far do you want it to go?
That's actually, I need to go look at that chart, because that's a
Yeah.
good one to keep a
Correct.
close eye on, because that's one we both have had in the past that I think we're both probably
I've
out
still
of.
got some
Oh,
Loopring
yeah.
that's pretty wrecked, but thankfully the APY has been at 100. So
I was 100% out around 3, and I've just been out since about $3.
yeah,
All right, guys.
I bought a
sorry.
bit back to provide liquidity. But anyway, so well, thanks everyone as ever, and happy New Year again to everybody from China. And
Thanks again, Alan.
we'll back to normal soon. Yeah.
I'm going to share my screen and we'll wrap.